This is Wallet Brief, where we break down what actually moved the U.S. economy this week, without the noise. If prices, interest rates, jobs, housing, or taxes are quietly changing your money, this is where you stay informed. Let's get into what really happened this week, and what it means for your wallet. Over the past year, the U.S. housing market has been shaped by a challenging combination of high mortgage rates and limited housing supply. These two factors have made it more difficult for many buyers to enter the market, while also keeping home prices relatively elevated. In the months leading up to this week, housing activity showed signs of slowing compared to earlier periods. Home sales moderated, and many potential buyers chose to wait on the sidelines, hoping for better affordability conditions. At the same time, inventory levels remained tight. Many homeowners were reluctant to sell, especially those who secured lower mortgage rates in previous years, which further limited the number of homes available on the market. This week brought additional signals that reflect this ongoing balance. Housing market activity remained relatively steady, with modest changes in listing activity and buyer demand. Mortgage rates continued to hover at elevated levels, which is still one of the biggest factors affecting affordability. Some regional markets showed slight increases in listings, suggesting that more sellers may be entering the market as the spring season approaches. However, demand remains cautious, with buyers carefully evaluating affordability before making decisions. Looking at the broader trend, the housing market continues to operate in a constrained environment. Prices are not rising as rapidly as in earlier years, but they are also not falling significantly. Instead, the market appears to be stabilizing at a higher cost level. For households, this creates a mixed situation. Prospective buyers may find slightly more options in some areas, but affordability remains a major challenge due to mortgage costs. Monthly payments are still significantly influenced by interest rates, making homeownership less accessible for some families. For current homeowners, higher home values may provide stability in terms of equity, but moving or refinancing decisions remain influenced by the current rate environment. Renters are also affected, as limited housing supply can contribute to continued pressure on rental prices in certain regions. As a broader cultural reference, housing affordability has become a widely discussed issue across different income groups, reflecting how central housing costs are to overall financial stability in the United States. Looking ahead to next week, key indicators to watch include updates on mortgage rate movements, new home listings, and housing demand data. These signals will help determine whether the market begins to loosen or remains constrained. For now, the housing market remains stable but tight, with affordability continuing to shape decisions for buyers, sellers, and renters alike. That's your wallet brief for this week. These changes don't always make headlines, but they do change how much you pay, save, and earn. We'll be back next week with